If you thought the global financial crisis of 2008 was a wild ride, brace yourself for another roller coaster. The economy is currently experiencing shockwaves from the recent collapse of the biggest US bank, California's Silicon Valley Bank or SVB, which was closed by state regulators on March 10, 2023 due to a significant drop in deposits. To add to the chaos, Swiss bank Credit Suisse suffered a massive blow just 5 days later when its largest investor refused to provide more funding, causing its share price to plummet by 24%. What does this mean for the average person? Is a total recession on the horizon? The banking industry is in a major crisis with big players collapsing. How did it get to this point and what does it mean for the economy's future? That's why today let's talk about what just happened to banks across the globe and what it means for all of us. Hey friends, welcome to Capitalista. Before we dive in, please take a moment to hit the like and subscribe buttons down below. So, how did this banking crisis happen? One crucial event that caused it all, the Silicon Valley Bank's collapse. This bank was a major player in California and it was the largest bank in the world's premier technology and innovation hub. Tech startups, venture capital firms, and clients in fields like life science and healthcare all turned to Silicon Valley for their banking needs. They worked with big names like Roku, Roblox, and Vox Media. But when SVB fell apart, it started a chain reaction that shook the banking industry worldwide, not just in the United States. So what happened at SVB and how did it affect everyone else? Let's get to the bottom of it. Recent years have brought extreme ups and downs to the tech industry, particularly in the Silicon Valley. These changes hit the Silicon Valley Bank, which used to be on the top with about 100 billion in deposits. Interest rates are at an all-time low, making things look even more uncertain. SVB believed that they were making a smart move by investing billions in long-term US Treasury bonds, typically backed by the government. Unfortunately, things didn't go as planned, and a lot went wrong. As interest rates increased, the bonds started losing value rapidly, and SVB was caught in a tricky situation. The tech industry also began to see a downturn with firms pulling their deposits out. This caused a bank run, with everyone frantically trying to withdraw their funds, fueling the fire of panic. SVB was in a pretty bad place. Clients were withdrawing their money and the bank was forced to sell a large portion of its bond holdings at a loss of 1.8 billion. Things only worsened as other investors became nervous and started pulling out even more money. The day before the bank collapsed, clients withdrew 42 billion, causing a jaw-dropping loss. As a result, SVB's share value plummeted 60% in just a few days, wiping out 80 billion in value. The collapse of SVB was a catastrophic event that had a massive impact on the financial world. Now, what led to the collapse of SVB? SVB's collapse was not caused by a single reason. The pandemic disrupted the economy and the stimulus checks caused inflation to soar. Consequently, the Federal Reserve raised interest rates to control rising prices. This made loans expensive, resulting in reduced consumer demand and stabilized prices. SVB's investments in long-term US Treasury bonds from 2020 to 2021 suffered due to the higher interest rates. However, politics is also to blame. Senator Bernie Sanders accused former President Donald Trump and Congress of loosening credit requirements imposed under the Dodd-Frank banking legislation to safeguard banks like SVB from failure. SVB was left exposed without these requirements. Additionally, SVB lacked a crucial chief risk officer for some parts of 2022 who could have identified and mitigated investment risks. Now, was SVB purposely leaving this position unfilled to conceal something, or did they fail to manage the risk? Shareholder lawsuit expert Reed Catherine claims that something shady happened, while investor Danny Moses, who foresaw the 2008 financial meltdown, says SVB's risk management was terrible. The rumors are spreading like wildfire, but the truth is, it's not just one thing that led to the near collapse of the banking industry. It's a mixture of several factors. On March 10, 2023, the California Department of Financial Protection and Innovation closed the SVB. The appointed receiver was the FDIC, which is like insurance for your money in a bank. They cover up to to $250,000 per account if something goes wrong. Unfortunately, tech startups with millions saved in those accounts may be in trouble. That money could have disappeared or been delayed without the Fed's involvement. It would have been a messy situation, risking people's livelihoods. However, the federal government stepped in and cared for the people by creating a new bridge bank that allowed SVB clients to access their accounts. The FDIC and Federal Reserve boards recommended this action to Secretary Yellen, who approved it. All depositors of Silicon Valley Bank will have access to their money from March 13th onwards without any losses to taxpayers. This solution allowed clients to perform all regular banking activities, including online banking and accessing their money through ATMs, debit cards, and checks. A bridge bank is a national bank that operates under the FDIC-appointed board and assumes the liabilities and assets of a failed bank. It's designed to bridge the gap between bank failure and FDIC stabilization, ensuring an orderly resolution. Although the FDIC shields SVB depositors and guarantees that their cash is safe, the protection doesn't extend to SVB shareholders and debt holders. In their joint statement, the three entities reassured the public that the U.S. banking system is secure due to the improvements implemented following the 2008 financial meltdown. But is it really true? Can the U.S. banking system really be holding up so well amidst such a massive shock to the system? The banking industry is reeling from the collapse of SVB, which caused a ripple effect throughout the sector. A study published by the Social Science Research Network revealed that about 186 banks in the US could fail if half of their depositors withdrew their money too quickly, like what happened with SVB. 3 significant banks have already collapsed in just 3 days, including Silvergate Capital, which suffered $1 billion in losses in the past quarter and saw its shares plummet by 67%. Signature Bank also collapsed in the banking crisis. This situation poses a significant economic risk and increases the likelihood of a recession. According to Goldman Sachs, the growing stress in the banking sector has raised the probability of a US recession within the next 12 months to 35%, up from 25% before the banking crisis. Getting a loan from a bank is going to be tougher for people because of the banking crisis. Banks will be more careful about who they give money to because of the stress they're under. Janet Yellen, the US Treasury Secretary, says credit might get more costly and scarce, but there's more to think about. So what will the Fed do with its strict monetary policy now? Papa Powell pledged to increase rates aggressively recently before the banking crisis. They will have to pause the rate hikes now, which could mean inflation gets out of control again. Banking and financial experts have weighed in on the current banking crisis, including Chamath Palihapitiya, who's known as the king of SPACs. He warns that this could be the next big event that could trigger a great recession. Chamath predicts that without intervention from the Federal Reserve, regional banks could experience a run, leading to problems for national banks. He suggests solutions like guaranteeing deposits and having the Fed guarantee troubled assets. Chamath emphasizes that federal and international regulators must step in to prevent the destruction of hundreds of startups and years of innovation. Kevin O'Leary, also known as Mr. Wonderful, invested some of his savings with SVB. However, during an interview with Hannity on Fox News, he criticized the bank's management and board, referring to them as incompetent idiots. Surprisingly, he supported the Federal Reserve, opposing the bailout, which he believed would lead to the nationalization of the American banking system. Despite this, Elon Musk's opinion prevailed when it came to matters concerning technology. Elon likened SVB's failure to the 1920s Wall Street crash, which preceded the Great Depression. He warned that the US regional banking, however, could this be a temporary fix for an economy that could become cancerous? The collapse of SVB wasn't a one-time fluke caused by unforeseen circumstances. It's just the beginning of a string of bank failures triggered by various factors that led to their downfall. This banking crisis affects everyone, from regular folks to small businesses and big corporations. It's a major economic blow and increases the chances of a recession. And if the Fed keeps raising rates and other banks follow suit, things could worsen. This situation isn't resolved yet, and things might get even direr before they improve. So what are your thoughts on the ongoing US banking crisis that's affecting other banks worldwide? Let us know what you think in the comment section down below. And that's it for today. Make sure to show your appreciation by giving us a thumbs up, subscribing to the channel, and turning on notifications. This way you'll always be in the loop and never miss out on any of our uploads. Until next time, and take care.